Welcome to the S&P 500 weekly market pulse for the trading week of August 3 through August 7. I am Kollol Hossain, CEO CapitalinsightBD here, and we are breaking down everything you need to know about the week's market action, the numbers, the winners, the losers, and what it all means for investors. Let's start the headline numbers for this week. S&P 500 index surged higher this week, climbing an impressive 267.92 points to close at 7,757.64, representing a robust 3.58% gain that reflects renewed investor optimism flooding back into the markets. Monday kicked off the week with a powerful 110.78 point advance, sending the index to 7,600.50 as buyers stepped in aggressively. Tuesday continued the buying frenzy with another massive 103.6.02 point leap, pushing the S&P 500 to 7,736.52 as momentum built. Wednesday saw a slight pause with a modest 12.97 point dip, and Thursday experienced another marginal pullback of 13.59 points as profit takers emerged. But Friday brought the pulse back in force, with the index rallying 47.68 points to finish the week at 7,757.64. A stellar closed the cap of an exceptional week of gains. Weekly sector gainers. The information technology sector absolutely dominated the leaderboard this week, skyrocketing an eye-popping 5.38% as investors piled into growth-oriented names with remarkable enthusiasm. This sector's extraordinary performance underscores the market's unabated appetite for tech exposure. Materials followed by a solid 3.14% advance, while consumer discretionary climbed 2.08% as consumer confidence remained resilient. Industrial posted a respectable 1.63% gain, and communication services added 1.43%. Healthcare rose 1.18%. Consumer staples advanced 0.75%, and financial margins at modest 0.17% uptick as the week progressed. So, what is the sector loser? Emerging energy emerged as the week's weakest link, tumbling 2.44% as oil prices retreated and profit taking hit the sector hard. Utilities weren't far behind, sliding 1.77% as investors rotated away from defensive plays into more growth oriented opportunities. Real estate also experienced selling pressure, declined 0.81% as interest rate concern weighed the sector. Sector valuation represent a fascinating picture this week, with information technology commanding the highest P ratio at 59.7 times, reflecting the market's willingness to pay a significant premium for these stocks. Growth potential stocks. Real estate follows at 57.5 times, while communication services 48.3 times, and consumer discretionary at 41.22 times. Materials come in at 36.4, industrial at 35.4 times, and healthcare at 31.7 times. Consumer staples trades at an average 28.5 times, energy at 26.9 times, utilities at 24.1 times, and financial offer the most attractive valuation at just 21.2 times, making them a clear value play in the market. The average sector PE sits at 37.4 times, with 7 of 11 sectors trading below this benchmark, suggesting a value-oriented market positioning overall. So let's move for the gainer list. Palantir Technologies PLTR absolutely stole the show this week, rocketing an astonishing 36.9% higher as investors scrambled to get exposure to this high-flying tech name. Coherent Corporation COHR followed with a spectacular 31.58% surge, while Zebra Technologies JBRA posted a blistering 29.09% advance that captured market attention. Gardner Incorporation IT climbed 22.48%. Newmont Corporation jumped 18.46%, and Airbnb Incorporation ABNB soared 18.21% as travel-related names found renewed favor. Leaders holding LDOS at advanced 15.88%. Charles River Laboratories CRL rose 15.86%. Skyworks Solution SWKS gained 15.22%, and Lithium Holdings LITE rounded out the top 10 with a stellar 14% increase. Notably, the information technology sector dominated this list with 6 entries, showcasing where the real industrial buying power was concentrated. The average gain among these top performers was an impressive 21.78%. So now the flip of the coin. The trade desk TTD found itself at the bottom of the barrel this week, plunging 24.59% as selling pressure intensified dramatically. Davitin Corporation DVA followed with a steep 21.36% decline, while Honeywell International HONA dropped 19.09%. In a challenging week for the stock, Western Digital WDC fell 17.62%. Insulate Corporation PODD declined 16.81%, and Texas Pacific Land Corporation TPL slide 16.13% as energy names faced headwinds. NRGC Energy tumbled 14.69%. Applebin Corporation APP dropped 14.61%. Datadog Incorporation DDOG lost 14.50%, and Epitaph PLC APTV rounded out the list with a 13.42% decline. The information technology sector was most represented here with 3 entries, indicating that even within the strongest sector, there are notable pockets of weakness. The average loss among the top decliners was 17.28%. So now we are going to analyze the ratio, PE ratio. The valuation landscape this week reveals an extraordinary divergence between the market's most expensive and cheapest stocks. Intel Corporation INTC leads the high valuation group with a staggering 675.6 times P ratio, signaling extreme growth expectation priced into the semiconductor giant. Albemarle Corporation ALB follows at 464.5 times, while Microchip Technology MCHP trades at 450.4 times, and Plant Technology PLTR at 416.2 times, highlighting the momentum the premium investors are willing to pay for technology exposures. Datadog Incorporation commands 4.08 times. Palantir Technology, PSKY at 404.7 times. Sienna Corporation at 355.7 times. Tesla Incorporation at 312.7 times. Coherent Corporation COH at 245.8 times. The Lithium Holdings LITE at 222.6 times. The average PE among these high players stands at an astonishing 395.3 times. On the other side, Comcast Corporation CMCSA offers the most conservative valuation at just 4.7 times, followed by Charter Communications CSTR at 5.55 times and Amcor PLC at 5.7 times. APA trades at 6.2 times. Analyst Corporation all at 6.4 times. Mosaic Company MOS at 6.7 times. AT&T Incorporation at 7.6 times, and Edition International EIX at 8 times. HP Corporation HPQ at 8 times, and Verizon Communication Visit at 8.32 times. The average among these value names is just 6.7 times, creating a remarkable spread that highlights the stark segmentation between growth and value investors. So we are going to look at now who are the leader of this week. Turnover leader. Market liquidity soars to truly exceptional levels this week, signaling intense capital rotation that often precedes significant market moves. Micron Technology dominated trading activity with a mind-blowing 18.5 trillion in turnover, making it the most actively traded name by a considerable margin. Nvidia Corporation followed closely with 16.19 trillion, while SanDisk Corporation SNDK recorded 11.7 trillion and Microsoft Corporation saw 11.60 billion trillion. Hence, Apple Incorporation generated 9.69 trillion. Advanced Micro Devices traded 9.26 trillion, and Amazon Corporation saw 8.52 trillion. Palantir Technologies, riding its incredible 6% gain, generated 7.6 trillion in turnover. Alphabet Incorporation Google traded 7.20 trillion, and Tesla Corporation rounded out the top 10 with 6.22 trillion. The technology sector commanded attention the 7 of the top 10 positions, highlighting the concentrated institutional interest in this market. Segmentation. Average turnover across leaders reached approximately 10.66 trillion, representing extraordinary liquidity that provide excellent trading opportunity while also suggesting potential inflection points as consensus views as tested in real-time trading. So what is the tech market summary? At a glance, the S&P 500 delivered a stellar 3.58% gain this week. The index opened at 7,489.72 and closed at 77,757.64. Palantir Technology emerged as the week's top performer with a stunning 36.90% surge. The trade desk TTD was the week's biggest loser, falling 24.59%. Best sector information technology 5.38% up, or sector energy 2.44 down. Highest sector P information technology 59.7 times, lowest sector P 21.2 times, average sector B 37.4 times, sector P spread 38.5 times, top turnover MU 18.57 trillion, combined turnover top 10 106.6 trillion, highest stock P INTC 675.6 times. Lowest stock P CMCSA 4.7 times. So, key market observation, bullish momentum. The market demonstrated strong upward momentum with broad-based participation. Moderate sector valuation spread and information technology leads at 59.7 times, while financial trades at 21.2 times, showing typical sector valuation hierarchy. More sector 7 of 10 trade below average PE, indicating value-oriented market positioning. Sector leadership. The information technology sector dominated with 6 stocks in the top 10 gainers, indicating concentrated institutional interest. Turnover concentration. AMU lead with 18.57 trillion trading volume, with the technology sector amounting for 7 of 10 most traded names. In institutional stock, individual stock valuation divergence. Extreme PE spread 670 times between INTC 675 and CMCSA 4.73 times, highlighting the market segmentation between growth and value. So now look at the Federal Reserve economic indicators. Macroeconomic indicators. Federal funds rate 3.63% as on July 1st, 2026. Consumer price index CPI 332.57 as on June 1, 2026. CPI less food and energy core CPI 336.06 June 1, 2026. Unemployment rate 4.10% July 1, 2026 data. Real gross domestic product 24,270.60 on April 1. 10-year treasury yield 4.69% as per August 6, 2026. Producer price index PPI 286.83. So this is our weekly roundup. Those who are not subscribed yet my channel, I am requesting to all you to subscribe to get latest updated news and everything related S&P 500 and Nasdaq 100. So no more today. See you again. Happy weekend.